Welcome to this Back to Business webinar that's part of a series we're running at Evoke Management. So welcome if you're coming back, and welcome if you're here for the first time. Can I just ask that you put your microphones on mute if you can. We'll probably mute everyone as well, but if you can keep it on mute, that would be great. If you do want to leave your cameras on, that's great. It's nice to see people's faces and see them, but yeah, if you can keep yourself on mute. So once again, welcome everyone. We are recording this, so we're going to share it afterwards if there's anything in here that's going to be you want to take away and use. So I'll just kick off. I'm just going to introduce myself. So my name is Boll. I'm the founder of Evoke Management. We're joined here today by obviously people that have shown an interest in our webinars, but also some of my team as well that are all part-time part-time finance and commercial directors. So who are we? Just for those that don't know, we're a team of experienced finance and commercial directors. We are focused entirely on the success and growth of SME businesses. I like to say that it's us helping those businesses move forward. So anyone running a business or as part of the management team, it's helping you move your business forward. We've also, over the last couple of months, as you can imagine, been helping companies with access to the government-backed funding, assisting with disaster scenario planning, which I know for some people this is the first time they'd have to do that. So we've been helping with that. And then forward-looking planning to help them trade through this and come out the other side, hopefully a stronger company and basically a better company as they come out of this. So that's what we've been doing. The purpose of this webinar is purely about finding the cash, and we've run a number of these about what you need to do in terms of accessing government-backed funding. This is more focused on actually what you can do within your business, the controls that you have. So as an example, I just want to put this up here, finding the cash. So I've taken, as an example, some simple numbers from the financial statements of a company. This is 12 months of historic data. I could be looking at the last quarter, but in this case, I've just looked at the last 12 months. I've actually taken these numbers and they are rounded slightly, but someone that signed up for this call, I've gone on to Companies House, I've looked at the last stat accounts, and I've rounded up some numbers that are on the financial statements. So these are examples of a company that's actually on this call today. I'm not going to mention who it is, but you might recognize some of these numbers. So all I've got here, very simply, revenue, gross margin and profit. So this company's making £1 million a year. And then off the balance sheet, accounts receivable, the stock, and accounts payable. So very simply, I've taken those numbers, and I just want to illustrate to you, if we look at those seven things that are within your control, so I'm going to call them controllable drivers, what would be the impact of just an improvement of one on those drivers? So I'm looking at really, really small incremental changes that's going to have an impact on your numbers. So I call this the power of one. So if I adjust all those variables by 1% or 1 day, I can improve the profit by 215k, and I can improve the cash position by 253k. So if you're running your business and you're going through this process of uncertainty, there are things purely within your control to drive your cash position up and improve your profit. You'll know cash and profit isn't the same. If that's not something you're familiar with, then don't worry about it. It's something we can help with if you're not sure about that. But all I'm doing here is indicating with some simple changes, you can improve cash and profit. And this is just to open up your eyes around some of the stuff that we would do or can talk to clients about. So how am I doing that? And I'm just going to go over this quite briefly before I pass over to one of my team to go into the detail. The 7 drivers. So price, if we increased your prices by 1%, we would have an impact of 85k on cash, 100k on profit. Volume increase, if I increase that by 1%, I can improve your cash by 5k, I can improve your profit by 25k. Cost of goods sold, to improve your margin, 1% improvement, 80k cash, 75k profit. Overhead reduction, if we reduce your overheads just by 1%, which is not a big number, improve cash and improve profit. Then these are other things on the balance sheet. So these are in changing the days, so just 1 day. So if we reduce your receivable days by 1 day, reduce your inventory days by 1 day, increase your accounts payable 1 day, these are all going to have a positive impact on your cash flow. This isn't profit, this is cash flow. But you can see there very clearly, I've improved the cash position by 253k, and I've added to your bottom line for the 12 months 215k of profit. That's pretty impressive. some people might think, why on earth would I, or how could I go and put my prices up 1% now? It's just not going to happen. So if I play around with this, okay, let's be realistic. Can we put our prices up? Potentially not. Can we increase our volume? Potentially not. Well, let's just look at our overhead. Let's reduce our overhead by 5%. Let's work on our amount of money that we've got outstanding. Let's bring that down by a couple of days, reduce our inventory holding days by 5 days, and increase our payable days, so pay later, by 2 days. I can have pretty much the same impact on cash. So I can improve the cash position by 273k in that situation and profit slightly less. But this is just another trade. All those things I can control. I can go and start changing them over the next couple of months ahead. So that's why we're talking about finding the cash in your business. So that's meant to be just a very simple high-level overview. What I want to do now is pass over to one of my finance directors that works with us in the SME companies that we have as clients, Robert Green. Robert, I'm going to pass over to you.
Thanks, Rob. So my next slide just details what I'm going to cover. First of all, I'm going to help you understand what can affect the movements in your bank balance. Talk briefly about how you can tactics using to increase both your gross profit and your operating profit. But mostly it's going to be about affecting positive changes in your working capital, and then I'll just wrap up with other forms of finance. So next slide, please. Right, so the amount of cash in your business, you would definitely think that that's to do with your profitability, which at the end of the day is the gross profit you're coming in, less your overheads, less your finance charges. Normally, no profit will mean you're not generating any cash. You may not be making a profit during these times at the moment during COVID, but it's still possible to have a positive impact on your bank balance. And that's mainly in the second one, the changes in working capital. And then as you look to forecast further ahead, you have to consider how you're going to finance any capital expenditure or investment into your business. Next slide, please. Right, so the boring accounting bit takes you through what's called the struggle. But basically, a business owner, this is an actual one. From a whole year's trading, where the business owner thought at the top that he was making £1 million worth of profit. And when we go through all the various factors in his business that have an effect on cash, you could see at the bottom line, during the year, he lost nearly £500,000 in cash. That was to say, he ended up with very little in the bank. And I'm going to take you through obviously you've got the profit from the invoices that you raise and the invoices you receive, i.e. your costs. Emphasize the changes, the effect that changes in working capital can have, as can obviously both buying and selling your fixed assets, and the loan repayments that you'll make on borrowings you've had previously. Right, next slide, please. Right. You can increase your gross profit in two ways. You can simply sell more. How can you do that? Bear in mind that you probably don't want to spend a lot of money on marketing. Always be aware of the cost of acquisition for each new customer that you gain. It may be far more cost effective and certainly more cash effective if you sell more to your existing customers. And that's something I'll show in the next slide. You can increase your margin. Now, it doesn't necessarily mean you have to increase your prices right across the board. You can increase your standard prices, but then give your key customers, where you get most of the volume, a discount back to the price that they're already paying. So you won't, hopefully you don't lose any existing business. And you can also increase your margin, obviously, by negotiating a lower cost of sales with your suppliers. Further to the gross profit, you can increase your operating profit by decreasing your overheads. There may be things that you regard as less essential that you can actually stop doing. But obviously the easiest way is to go out and get competitive quotes for all the things that you want to continue to doing. In these hard times, people will be looking to retain your business most frequently, and you'll be able to get a cheaper rate going forward. And the other thing, but the bottom line operating profit will be assisted by you borrowing less. So the more cash you can generate, the lower interest you'll incur. Next slide, please. Right, so this is a report that will help you target your where you can sell more to your existing customer. Now, as you can see from this detail, this is actual. So we've taken out the names of the customers down the side and just given them numbers, and we've taken out the descriptions of the different products, but they are just the products going across the sign. So while sales number 4 is the most popular product, sales number 8 is the second most popular product, and we have a company that's listed, I think it's 8th in the rankings of total sales, that isn't buying any of that product whatsoever. So there's an opportunity, because it may well be they're not actually aware that you sell that product. So they're busily buying product number 4. Make all your customers aware of all the products that you have available, and you can start populating that graph and changing the zeros into thousands. That's a very, the easiest and most cost-effective way of increasing your sales, by finding the gaps. Next slide. Right, so I'm going to keep banging on about working capital, and really in your monthly accounting pack, together with your P&L, you should be having these included in your key performance indicators. They are the stock cover, the days outstanding sales, and the days outstanding payments. Now, stock cover, primarily that's around physical stock for cost of sales. You can increase your stock turn, and i.e. reduce the amount you're holding, but still same amount, by simply order more frequently in smaller quantities. Let your supplier hold the stock rather than you have it piled up in your warehouse. You can decrease the slow moving stock with clearance sales, with quantity discounts. Turn that stock into cash as quickly as possible. You may even consider delivering directly, getting your suppliers to deliver directly to your customers with favourable payment terms, i.e. you get your customer to pay you before you pay your supplier, and therefore there is no negative cash flow involved in that process. And if you're a consultancy, for example, and you're building up work in progress on particular projects, then don't wait till the entire project's finished before you send your customer an invoice that he then pays another 2 months later. Send him invoices in installments, whether that be the first 25%, the 50%, whatever. That's going to make a significant difference in your cash flow. Days outstanding sales. Now that's a measure of how many days on average, measured against your sales for the period, does it take your customers to pay you. What you need to do is look at the level of credit that you've offered to your regular customers, both in terms of their total credit limit and the due dates on their invoices. Monitor their ratings on the credit limit to avoid bad debts. That's going to happen more and more during the COVID times. And just make sure that they pay you when they should. You could offer settlement discount, for example. With very low bank rates, you may have customers that actually have cash sat in their bank account. It won't be earning any interest, so make it earn some interest by getting them to share it with you quicker than your normal terms. When you're dealing with a new customer, for example, it may be possible to extract some kind of deposit with the order. Again, positive cash flow, and there's always the option of invoice factoring, which I'll come to at the end. Same applies then in reverse to the days outstanding payments, i.e. don't pay your supplier as soon as their invoice comes in. Take a little bit longer. It may be possible to negotiate longer credit terms if you're placing bigger orders. I stress you can place a bigger order but still have staged deliveries. That's the key of getting longer terms and keeping your stock down. You can use an instrument offered by your bank, a letters of credit. If you're dealing with particularly an overseas supplier that you hadn't dealt with previously, you've gone abroad to get a cheaper price, for example, with a letter of credit, then the payment of that invoice will not hit your bank account until the terms that you've negotiated with your bank. And always have a 90-day cash flow. That way you can stagger the payments to your creditors to ease any troughs in your cash flow. Negotiate that with them, explain to them that you have a schedule for paying them, particularly if you're in arrears, but always be proactive and keep your promises. That way you'll avoid any legal action. Next slide. Right, again, a complicated one. You will be getting copies of these slides, but the purpose of this slide is to illustrate the effect of the assumptions that Rob has talked about. You can see assumptions being made in right at the top there in terms of accounts payable, inventory, and accounts receivable. And you may not be able to see the small numbers, but a sustained improvement, marginal as we go through each month, but sustained improvement in the right direction. In this example, reducing days outstanding from 55 to 45, that's still more than a month to pay your invoices. And not paying your suppliers within 20 days, move that out to 40 days. We've got in there underneath in the profit, so we've got a little bit more volume, but we've got extra volume, a better margin, and that's pushed up the gross profit, as you can see from there, and it's ended up with a small increase, it has to be said, in profit, but an increase nevertheless. But just have a look at that cash balance. So this was a bank balance, if you remember, that disappeared from £500,000 down to virtually zero in a relatively short period of time. The combined effect of £1 million, trading at £1 million profit, and yet they've ended up the year with £2 million worth of cash. It may be an exaggerated example, but it gives you some, even if you achieved half of that, they'll have clawed back half of the, twice of the £500,000 that they lost in the previous year. Next slide, please. Okay, so let's look just briefly at the options for helping you with your working capital funding. You'll all be aware of the government schemes, the STIBLs, the BIBLs, and the Future Fund. The other methods that have always been there are invoice factoring with a factoring company, or indeed with your bank. This can be done invisible to your suppliers. So they think they're still paying you, even though they're paying into a bank account that is controlled by the bank. That's different to invoice finance. Sorry, I've got them the wrong way around. That's invoice finance. Invoice factoring, where you literally sell the debt to another company and they own it and they collect it from your customer. That's clearly obvious to your customer, and indeed could give them cause for concern. Letters of credit I've already mentioned. You'll all be aware of HP to finance a new capital asset, but remember you can always refinance an asset if it has a good value and a good life on it. There are companies that will specialise in financing what is essentially a second-hand asset, and there's always the classic sale and lease back. So you've got an asset, you sell it to somebody, you continue to use it and just pay them a rent for it. Instantly you've had a cash injection. And then there's always, as a last resort, the normal traditional term bank loan, which is going to be cheaper to you than an overdraft and enables you to spread that trough over a period of years where you're gradually then repaying the loan. The next slide, my concluding slide. What should your next actions be? You can see there I've listed 5 questions you should be asking yourself. You'll get the slides, so I won't read them out for you. But those really, as a business owner, you should be asking yourself, have I got all this within my business? And if so, you'll be able to manage your cash successfully. If not, then you need to get these processes in place. Thank you very much.
Great, thanks, Robert, for that. So just to summarise from that, what I introduced this webinar with is just some simple high-level adjustments you could make to those 7 drivers I mentioned that's going to have an impact on cash and profit. And what Robert's described is what you could actually do at the lower level, which actually is going to impact each of those drivers. If any of you are thinking this seems quite complicated or you wouldn't know where to start, then that's the kind of thing that we'd be more than happy to help you with, because I know for some people this is more yeah, it feels more confusing than it is to others. And also, if you are in a position where you're really thinking you need to demonstrate to a bank, or you need to just physically find the cash that you know you're going to have a holding going forward, then these are all the strategies that you can go and apply to the business. They're in your control and have that impact. So I would encourage anyone that wants to ask a question, we can cover that. So just put it in the chat and we can respond to those. In terms of next steps, so in my view, we are here to help companies through this. So we'd like to offer anyone that's on this webinar the opportunity to speak with us for 30 minutes and we can help you find your cash. So the initial slides I showed, we can take essentially 6 numbers from your revenue, whether that's over the last 12 months or if it's your last quarter. We can take those and we can start that process of helping you identify where you can actually find that cash. So we're offering everyone opportunity for a 30-minute meeting with me and the team to go through that process of finding your cash. I'm going to share a form, and everyone's going to get this on email anyway, but in the chat I'm going to share a form that we're using to capture that info. So if you have a look at that form, you can fill in the info, and on the back of that will trigger us to get in contact with you, book in a meeting, and we can give you that personalised review of your cash and profit and how you can change that. Yeah, if anyone's got any questions, please feel free to put it in the chat. The last thing I will say is some of you might still be looking to get funding from the bank or government-backed funding. We can help with that. We've been working with a number of companies on this, and we've had a lot of success in helping companies go through this process. So we're offering a few things here. Either we can just have a simple check and review of what you've done before you submit to the bank. So that would be for the civils type funding. We can take what you've done or restart what you've done and put the whole thing together for you. So that's a kind of create and improve what you've done and get it bank ready. At that point, there is normally a bit of back and forth between company and the bank, and we can be involved with that process as well. And then finally, it's the ongoing support, and that kind of links in with some of the stuff we've been sharing today, helping with that. So if anyone's at that stage where they need that, that's something else we're looking at. But as I said, happy to go through this process of looking at your individual circumstances, the numbers that you've currently got, and help you work out how to drive them forward. If anyone has got any questions, please add it to the chat. We've got a couple of minutes left. I'm going to ask one thing because it's always good to have feedback. I'm just going to ask a quick poll question to people that are here, just to ask, from the content that you've seen today, what we've shared, on a scale of 1 to 10, how likely you are to recommend the content discussed on this webinar to someone else. So I'm just going to launch that poll now, which should have popped up. So if you could respond to that, 1 to 10, 10 being the top, you are likely to share this, that would be great. And we will take that feedback and use it for our future bits of content. I've had just one question I've had come to me directly, is just asking around. So I'm just trying to stop that poll. Okay, I'm just going to stop that poll there. Thank you for those that responded. So yeah, one question, just talking about, I'll talk about what we're saying about stock. So stock, inventory, work in progress. If you're running a consulting firm, it could be that you actually got work in progress, which is just unbilled work done. So you might be working on we are working on consulting work projects that are going to be invoiced and then paid. That is your essentially your inventory, your work in progress that you can start to bill earlier or more regularly, which will have an impact on that. So just a question around that. Doesn't necessarily have to be just physical stock that you've got that you're then going to sell on. It could be your work in progress as well. Well, that finishes us pretty much on time. So this is a half-an-hour webinar. Everyone's going to get the slides for this and a copy of the video. And please fill in that form if you want to have a chat with us. There's some things on there that we've asked for in terms of your actual high-level finance numbers. If you're struggling with that, we've left some of them not mandatory. So if you're struggling with that, don't worry. Just reach out and we can help you put those numbers together as well. So thanks everyone for joining. Robert, thanks for presenting with me, and look forward to speaking to some of you soon. Thank you.